And we're in an environment now where, as operators, we're playing both defense and offense at the same time. We're playing defense because we have to deal with rising interest rates like everybody else. The difference is between the good and the not so good operators. The good operators have the cash flow to sustain it. Now, maybe their distributions are going to go down, the returns and the cash and returns going down, but they're not going to be in any kind of distress.
So we're seeing deals come up that I never thought I'd see, honestly, which is kind of cool. So we're, uh, you know, we focus on certain markets, and one of the markets that we never really see deals in, they're starting to pop out. And there's quite a few deals that we're seeing. We're seeing the volume hike up, but a lot of the deal volume that we're seeing are more distressed assets. So there's people that are definitely feeling the pressure of the market, and they're starting to offload. So we're seeing a lot of those challenged properties. A lot of them are overlooking, but there are some good ones in there.
All right, so
Owners that have owned for decades, even we're seeing some of those guys look to sell right now, which is pretty interesting.
So deal flow is up, which is interesting because after the interest rate hikes and inflation this time last year, when the market collapsed after February, March of last year, I mean, it pretty much dried up because lending went away. And then there was this giant gap between sellers and buyers, and very few actually traded hands because of that. So you're saying that deal flow is coming back and you're seeing some distressed operators. Explain why there might be distressed operators. What's going on right now that creates that situation?
Yeah, so a lot of it has to do with the pressure of interest rates rising. There's people that they saw it hit the top of the mountain, and maybe they bought early enough, and they're like, hey, there's still profit here to be made. I want to sell, and let's take some of that profit now. They think things are going to get worse, and maybe there's a crash or something like that. So they're going to come to the table. There's others that maybe have loans that they need to get out of, and so they're looking to sell just to get out of those loans. Or they see that they're struggling with operations, and they've run out of cash to continue those operations, and so they're like, hey, let's just sell and get what we can. So those are the main things that I'm seeing right now. And when we were at NMHC, we were hearing that there was going to be a lot of new deals hitting in Q1, and that is the case right now. There's a lot of people that are coming to terms with, hey, this is a good time for us to unload, and let's do it.
It's interesting because we kind of forecasted that late last year because of the rise in interest rates. And we're in an environment now where, as operators, we're playing both defense and offense at the same time. We're playing defense because we have to deal with rising interest rates like everybody else. The difference is between the good and the not so good operators. The good operators have the cash flow to sustain it. Now, maybe their distributions are going to go down, the returns and the cash and returns going down, but they're not going to be in any kind of distress. But what's happening now, we're starting to see now, is a lot of the operators that are not as good as operators, where the cash flow was skinny before, they're going into the red and they're running out of cash. And the problem with that is they can't refinance because they don't have the NOI, they don't have the occupancy. And so their only option really is to sell quickly. And it's not happening publicly. They're not getting market for it. It's going to be off market, and it's going to be very, very distressed. So it sounds like, Garen, we're starting to see that. So I'm actually really excited about the rest of the year. Because it might present some opportunities for us as well. This is why, and we'll talk about with Spencer, the opportunity this year is pretty staggering.